let's talk about another, of course, big meme stock that we've been watching, and that's AMC. It's Big Ape Escape. The movie theater operator still seeing its preferred equity class or ape shares move higher this morning as the market adjusts to the new issuance. Joining us now is Alicia Reese, Wedbush Securities equity research analyst. Alicia, thanks for being with us. You've got an underperform on the shares and a price target of $2. What's striking to me as I read through your note on this is it's not as though you're saying this is a terrible company that's going to go under like its UK competitor Cineworld. It's basically just that the shares are dramatically overvalued. But with all the retail interest in the shares, is there any chance of it actually coming closer to its fair value?
Sure. I don't know that as long as the retail shareholders are involved, that it will go back to its fundamental value where it should be fundamentally valued. But that's how we're valuing the stock. By comparison, we have Cinemark, who has roughly similar EBITDA, but they have a fraction of the shares outstanding and less than half the debt. So that $22 price target we have on Cinemark could be in line with AMC should they, buy back a lot of shares, repay their debt. They're not in a position to do that on shares, but with the ape shares, they are in a position to repay a significant portion, if not all of their debt.
Is there any movie release schedule that could save or provide some type of bullish sentiment or wave of bullish sentiment for AMC or any of the movie operators right now?
Sure. Well, I think right now we're going through a bit of a lull in the box office release slate. There's about a month and a half of, it's pretty light. So they're doing some re-releases. I think they're, bringing Avatar back to the movie theaters ahead of the Q4 new Avatar release. They're doing some, I think it's Star Wars release as well. They're just filling the release slate with alternative content just to get people, get the attendance up. But, there was really nice Q2. Q3 stepped up in the first half of the quarter. Q4 is looking really strong. 2023 is looking really strong. We're on the road to normalization in terms of box office. At least domestically. And it's a road back. The per film averages are doing actually quite well. The delta is that the volume is just not there yet. And that's a function of, production delays during the pandemic still hitting the release slate. I think that does start to normalize next year.
Alicia, what's the impact to AMC from Cineworld?
I don't think there's much at all. I think the Cineworld issue is very company specific. They had a lot of debt. They also have that overhang from the payment that they are supposed to pay Cineplex for that deal not going through. That was very unfortunate timing for Cineworld, putting in a bid for Cineplex right before the pandemic hit, and then they're not able to follow through with that acquisition. So I think their bankruptcy could have something to do with trying to get out of that payment to Cineplex, just in order to increase liquidity. I don't cover Cineworld, so I'm not as familiar with their financials as I am with AMC's or, other companies in the space. But I would say that it's not a reflection on AMC or any of the other players in the space. I'd say, if anything, AMC and Cinemark and the like, they gained market share on Regal throughout the pandemic. Quite a bit, because Regal took a lot longer to reopen their theaters compared to AMC and Cinemark. And then, after they did reopen, AMC and Cinemark have retained a lot of those market share gains.
Alicia, would it make sense for AMC or Cinemark, for that matter, to buy up more theaters? I mean, in this business, is bigger better? Is owning more theaters better for the company's financials?
Not necessarily on its face. Owning more high-quality theaters, closing any underperforming theaters as those leases come up for renegotiation, and then, buying more high-quality theaters as much as they can, having premium large-format screens, updated amenities in the theaters, anything that would add to EBITDA. You can't have a really expensive theater that's not bringing in a lot of attendance. So any of those high quality theaters would surely add to EBITDA and, increase valuation.
Well, speaking of valuation, Alicia, I think a lot of folks would agree that why the stock trades where it is because of Aron and his ability to go out there and sell the sizzle, his social media presence. If he's not CEO, what happens to this company and stock?
Well, it certainly depends on if his successor would be as active as he is in outreach to his shareholders. He's certainly done a really admirable job in outreach and keeping his shares afloat with his shareholders and selling, things like the Ape, popcorn, and Highcroft and the like. The average institutional shareholder wouldn't necessarily go for all of these tactics, but he's certainly been able to sell them to his shareholder base, and he has an opportunity now to use those Ape shares, of course, with more dilution, but to repay a significant portion of the company's staggering debt balance, and reaccelerate that growth, the upgrading in Europe, where there's plenty of potential, and upgrade screen growth in the Middle East, where they have a lot of potential for really high value theater locations.
All right, we just had a conversation with the chief silverback, if you will, a couple weeks back. Alicia Reese, Wedbush Securities equity research analyst, joining us. Thanks so much for the time this morning.